Welcome back to Finpod, your daily financial digest. I am Evan, and I am here to help you make sense of the market chaos. Today's episode is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's dive in. It has been a rough day for the tech sector. Meta is down over 5% today, largely driven by reports that the company is considering a significant new equity sale to fund its massive capital expenditure requirements. Investors are clearly jittery about how much cash the company is burning to fuel its artificial intelligence ambitions. Meanwhile, Marvell Technology took a massive hit, dropping nearly 17%. After a blistering rally in recent weeks, the stock is seeing a sharp reversal as investors lock in gains and worry about the broader semiconductor momentum trade unwinding. On the flip side, Eli Lilly is holding up, ticking slightly higher. The company received a major boost from CVS Health, which announced it will expand coverage for Eli Lilly's obesity medications, Zepbound and Foundayo, starting later this year. This is a huge win for their market access. Lululemon also faced intense selling pressure, down about 9%. The company reported earnings that beat expectations, but they slashed their full-year guidance, citing a contraction in their core North American market and negative media sentiment. And Tesla is down over 6% as the stock broke below its 200-day moving average, signaling a technical breakdown that has momentum traders running for the exits. Looking at the broader market, it was a brutal session for the major indexes. The Nasdaq led the rout, falling over 4%, marking its worst day in months. The S&P 500 and the Dow also saw steep declines. The primary catalyst was a stronger-than-expected jobs report, which showed employers added 172,000 jobs. While that sounds good for the economy, it spooked the markets by fueling fears that the Federal Reserve will be forced to keep interest rates higher for longer. In the world of AI, the conversation is shifting towards safety and infrastructure. Anthropic is now urging industry leaders to coordinate on potential pauses for advanced AI development if risks grow too quickly. Meanwhile, Cognizant launched a new sovereign physical AI platform, aiming to integrate autonomous systems into industrial infrastructure. The focus remains heavily on whether the massive capital spending we've seen from the giants will actually translate into long-term profit. Outside of the tech giants, a few other stocks caught my eye. ABM Industries reported earnings today, with revenue up over 8%, though the stock saw some volatility as investors digested the results and the company's outlook for the second half of the year. It was a busy day for earnings, and the market clearly favored companies that could promise stability in a high-rate environment. To wrap things up, we saw a tech-heavy sell-off triggered by jobs data and concerns over AI spending, while individual names like Lululemon and Marvell faced their own specific headwinds. If you enjoyed today's breakdown, please like, share, and subscribe to the channel. Drop a comment if there is a specific stock or sector you want me to cover next week. For stock recommendations, visit Fintwit.ai. Thanks for listening, and I will see you back here tomorrow.